All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer how we start each of these. Nothing in this podcast or any of our other materials should be taken as investment advice. James or I could have positions in any of the stocks we may mention in today's podcast, and we reserve the right to change those positions at any time. So make sure to always do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be Faraday Future. So for those of you who may not be as familiar with Faraday Future is one of the electric vehicle startups that kind of came onto the scene in 2020 and 2021 when it seemed like there was a new EV startup going public seemingly every week. Faraday Future in particular was founded about 10 years ago, back in 2014, and went public via SPAC in early 2021, right at the peak of the SPAC mania. Faraday Future, their big thing was they plan to build super luxury EVs. So if you see in the bottom left, they have their concept car, which was a electric supercar that only had one seat. So they were really definitely targeting the super high end of the car market. They've had trouble with their financials since almost their inception. Since back in 2016, there have been major questions about their viability from a financial perspective, and that has continued to the current day. Most recently, earlier this year, they even failed to pay rent for their headquarters. So obviously, extremely dire financial positioning, and you can see that in the stock price. So they went public back in 2021, as I mentioned earlier, but Google Finance rounds its percentage share price performance to minus 100.00%. So obviously a huge disaster for anyone who's held the stock long during that time. The problem that Faraday Future has had is the same as all the other failed EV startups from its time period, which is that they've been unable to put into commercial production any car. So their flagship car was supposed to be the FF91, which was marketed as kind of being a Tesla killer. When it was unveiled in 2017, it was unveiled to great fanfare from critics and the media. And in the first few hours, it received tens of thousands of reservations. It was supposed to begin production only a year or two later in 2018. However, as of this year, only a handful have ever been delivered, and they have never been able to set up a commercial scale production line. So with all that being said, this is one of the worst businesses that you could possibly imagine as a public company. Its stock has fallen, again, minus 99.9+% since its SPAC. However, just more recently, just in the past several months, it has become something of a meme stock. And back in May of this year, it experienced a 50 times surge in price during a short squeeze. And most recently, just in the past week, it has also surged in price again, almost tripling just in the past few days alone. So despite the extremely poor fundamentals that some of the worst that you could possibly imagine, there are still many people buying the stock, trying to make money by buying the stock. So with that, I'll kick it over to you, James, to talk about a little bit more about the company's current situation and its prospects for the future.
Yeah, so Faraday Future, as Ryan described earlier, is facing financial difficulties. This chart at the top left shows their free cash flow each quarter. Now, to date, Faraday Future has recognized, marginal revenue, like a few $1,000s of revenue. They've only delivered a handful of cars. So for practical purposes, the revenue to date has been almost zero. But they burn, tens of millions of dollars every single quarter. And they fund these losses by issuing debt and equity. So this chart on the top right shows how much money they're raising from by issuing both debt and equity. And for all of the debt that they issue, the debt is convertible into shares, or they at some point in the future will make deals with their debt holders to convert them into shares. So while they do issue both debt and stock, pretty much all of the debt eventually gets converted into stock because Faraday Future doesn't have any cash to actually pay back the debt. So the only way that they can pay back the debt is to convert it into stock. And that's how we can see on the bottom right, Faraday Future's number of shares outstanding. And the share count has been hyperinflating over the past, this chart is only since the fourth quarter of 2022. So really just in the past 2 years, the share count has increased astronomically because as the share price decreases, if you want to raise capital to fund your losses, you have to issue an ever increasing quantity of shares to raise a certain amount of capital. And then this creates sort of a downward spiral where the increased share count puts downward pressure on the stock price, making the stock price go down even more. And then that obliges them to issue an even greater number of shares, further accelerating the dilution. And that's what we can really see here with the exploding share count. Now, despite issuing huge amounts of shares and basically trying to raise as much capital as they can, Faraday Future is still living hand to mouth. And we can see their level of cash and equivalents. Back in 2022, and the beginning of 2023, they had $30 million of cash as of the first quarter of 2022. That's, I guess, a relatively healthy level of cash to have. But their cash has been dwindling. And in the most recent, at the end of the fourth quarter, or at the end of the third quarter of 2024, so as of September 30th, 2024, they only had $7 million of cash on hand. So even as they've been issuing huge numbers of shares, they have not been able to build up a sizable war chest of cash because they basically burn the cash almost as quickly as they raise it. Now, a lot of people who buy shares of Faraday Future, they don't necessarily even believe in the company. They don't necessarily believe that the company itself will be successful, but they're buying shares. It's basically become a meme stock where people see that the stock has been very volatile in the past. Faraday Future has a very high short interest. So people think, oh, look, back in May, there was this big short squeeze. Maybe if I buy shares now, we can create another short squeeze and I can make massive gains. However, one thing you have to understand is as the share count increases, as the share count expands, the ability of the share price to go up is greatly diminished. So let's take the example of the previous short squeeze from May of 2024. The share price increased to $1.80. Subsequent to that, there was a reverse stock split, a 40-for-1 reverse stock split. So adjusting for the stock split, the share price was $72. At the time, as of the end of the third quarter of 2024, Faraday Future had 11 million shares outstanding. And if you multiply that $1.8 per share times 11 million, at the peak of that previous short squeeze, the share count was about 800. The market capitalization was about $800 million. However, because Faraday Future's share count increases so much, even throughout the quarter, by the end of the third quarter, they had 11 million shares outstanding. But as of May 20th, at the peak of the short squeeze, the share count was almost certainly much less than 11 million because they issued a lot of new shares in between May 20th and June 30th. So because the share count is increasing throughout the quarter, and we're just looking at the share counts as of the end of the quarter, we're actually overestimating the share count with the 11 million number. Therefore, the market capitalization at the peak of the May 2024 short squeeze was actually less than $800 million. Now, today, as of the time of recording this video, the share count has increased to 44 million shares, and that is increasing every single day. The price, as of the time of recording this video, the price of Faraday Future stock is $3.60. Now, if we multiply those together, the current market capitalization is $160 million. Even if the market cap goes all the way back up to the previous peak of $800 million, that would only translate to $18 a share, not $72 a share. So the point is, as over time, as the share count gets bigger and bigger, the even if we have another short squeeze or whatever, the peaks are going to get smaller and smaller, because even if you go back up to a very large market cap, now that the share count is so much bigger, the share price is not going to be as high, and that's something you definitely need to keep in mind. Now, as Faraday Future has become a meme stock, a lot of the people who buy shares, the retail investors who buy shares of Faraday Future, think that they are going to catalyze some big short squeeze, and they're going to be sticking it to short sellers and sticking it to the man. This is actually far from being the case. Pretty much the only thing that you're accomplishing when you buy shares of Faraday Future is you are allowing the company to raise more capital and allowing the company to survive. Frankly, this company has been around for it's been around for 10 years now. They've delivered a handful of cars. This company has been a complete and total failure just as an operating business. So in an economically efficient world, Faraday Future would have shut down and gone bankrupt a long time ago. But because of all these meme traders and all this meme stock stuff, they have been able to raise hundreds and hundreds of millions of dollars from naive retail investors to keep the lights on and keep operating. And the main beneficiaries of this meme stock are the insiders, the CEO and the upper management of the company. Now, just recently, Faraday Future delivered a grand total of 13 cars. And as a result of delivering 13 cars, the company gave a massive increase in salary to the CEO and the founder. So both the CEO and the founder are each getting this year approximately $2 million worth of cash plus $4 million worth of stock as compensation. Now, the only reason that they're even able to fund this compensation is from all of the capital that they've been able to raise, primarily from the retail investors who are buying this as a meme stock. So these meme traders, they're not sticking it to the hedge funds, they're sticking it to the man. All that they're doing when they buy Faraday Future stock is donating money to the CEO and founder and other, upper level executives of Faraday Future who continue to collect massive salaries even as the company is a complete failure. And in the long run, as we talked about earlier, as the share count increases, there can still be massive volatility in the stock. There can still be short squeezes and run-ups in the stock, but each time the peaks are going to get lower and lower. Just mechanically and mathematically, this has to be the case, because as the share count increases so much, it's just not possible to get the share price as high as it was in the past. And if you think back to the slide that Ryan showed at the very beginning, that the share count, there's been a ton of reverse stock splits, but the share price has decreased by almost 100%. So, in the long run, the short sellers have actually done very, very well. And the insiders, the CEO and the other executives who are collecting $1 million salaries, they're doing very well. The losers are the retail investors who are buying this as a meme stock, and maybe they can pump up the share price a little bit in the short term, but in the long run, as the dilution hits, the share price will continue on its path towards zero. So that's about all we had to talk about Faraday Future today. As always, if you have any opinions or thoughts about the company, please let us know in the comment section below, and we will see you all on next week's video.